Hi guys, welcome back. In this video, we are going to be talking about lesson 1, 2 in your accounting uh, book. And lesson 1, 2 is where we start actually recording and analyzing some of the transactions as it applies to the business that we're going to visit over and over again throughout this whole course, Delgado Web Services. So we're going to talk about classifying accounts as assets, liabilities, or owner's equity. Analyzing the effects of the transactions on the accounting equation. So we're going to go back to that accounting equation that you kind of saw in lesson 1-1, but it's going to look a little bit different. And then we're going to talk about cash and cash on account transactions when you buy something on credit versus just paying cash for it up front. So let's remember, again, we're going to be dealing with this business, Delgado Web Services. It was started by this guy, Michael Delgado. And so for our purposes, just know that this business is set up as a proprietorship. It is sometimes referred to as a sole proprietorship, but it is just a business owned only by one person. And so in this case, Michael Delgado set up this Delgado Web Services as a service business. It's a business that provides a service, for example, instead of something like making a product. So he designs websites for other businesses, and that's his business model. A proprietorship is important to know that it is a business structure. It's owned, again, by one person. One important piece of it when you set up a business as a proprietorship versus something like an LLC or a limited liability company or even a corporation, the owner is responsible for all debts of the business in a proprietorship. In an LLC or a corporation, those businesses are separate from the individual and they are not necessarily responsible for all of the debts. So you might see something like that where a person like Donald Trump would declare bankruptcy on a lot of businesses but still be very wealthy himself. You see that a lot with other business owners. They're able to separate that out because they're structured differently. If Michael Delgado ever declared bankruptcy, it would impact him as an individual as well. So we're going to be working with Delgado Web Services throughout this course. It is going to be a proprietorship, and that's the accounting that we're going to be doing. We're going to be setting up essentially an accounting system for a sole proprietorship throughout the rest of this course and looking at all the different things that go along with that. Michael Delgado wants to set up his business, and so he's going to first of all do a business plan. If you took my business management class, we did sort of a business plan. If you were in DECA, you might be working with a different type of business plan. In accounting, we're going to work with the financial part of those business plans, which at least in management, we didn't get into as much. But the financial part is really what accounting is kind of all about, to be able to list and analyze the financial health of a company. So let's get started. We're going to be working now with the accounting equation. So this is important. Again, we'll be used and referred to this throughout the course. It looks a little different than the personal net worth statement, where we had liabilities over on this side. Assets minus liabilities equals owner equity. Just by a little algebra, we can move this stuff around if we ever need to. But in general, this is the stuff that we're going to be working with. Assets equals liabilities plus owner's equity. So know this equation, memorize it, get it into your head right now, because it's going to be help to determine the value of a company. So we can see the accounting equation listed up here, the same, just like we saw, assets equals liabilities plus owner's equity. And then we have a T-chart right here. And we're going to be working with a lot of these T-charts in accounting, but we have left side amounts and right side amounts. And as we start to record these transactions, we need to know that these two sides of the equation need to always be equal. So again, assets always need to equal liabilities plus owner's equity. So if you make a transaction, if you record a transaction on this side, an equal thing needs to happen over on this side, or if two things happen on both this side, it needs to be a positive amount and then a negative amount over on this side so that it's still equal. So it needs to always be in balance. Just as a review from lesson 1-1, assets mean things that the business owns. Liabilities are the things that the business owes. And then owner's equity is the amount that the owner, in this case, Michael Delgado, owns of his business after we account for the liability. So how much of the assets does Delgado as a business own after the liabilities are paid off. So as we kind of begin to work with the accounting equation on Delgado Web Services, we're going to start recording transactions. Just remember that the activities that we're talking about here and the accounting that we're doing on that equation are going to apply to the business and not Michael Delgado himself. Personal records and business records are separate. Even though he is responsible for some of the debts in terms of accounting, we are not going to worry about that at all. So they are separate. And this is going to be kind of important on this next one when Michael Delgado invests some money into the company initially. And you say, how do we account for that? Separate out Michael Delgado as an individual from Michael Delgado's business, Delgado Web Services. So receiving cash, transaction number 1. So we're kind of following along in lesson 1, 2, and we're going to start recording our first transactions. And so the transaction that happens on January 2nd, Delgado Web Services received cash from the owner, Michael Delgado, as an investment of $2,000. So in this case, Michael Delgado, the individual, invests $2,000 into the company to get started because, again, at the beginning, the balances are all zero. He just started this business, has no clients, has no revenue, nothing, but he's just going to start into this. So Michael Delgado invests $2,000 into the business. So that means in terms of the business, the effect on the accounting equation, how we would account for that investment of $2,000 is you would invest the cash account balance, the asset of cash, so like the company's bank account goes up by $2,000 because he invests $2,000 into that, right? So assets go up plus $2,000. And as we said, since it's happening on both sides of this equation here, an equal transaction or an equal recording needs to happen as well. So what happens, the effect is owner's equity also goes up by $2,000. So again, separate out Michael Delgado as an individual. Think of the business only. $2,000 is invested into the business, so the cash goes up by $2,000. The equating transaction that happens is owner's equity goes up also by $2,000. Next transaction that happens is paying cash for supplies. And just as a little side note, as you see these things, cash, supplies, prepaid insurance, Michael Delgado Capital, these things are account titles. Just like in the net worth statement, there can be multiple asset and liability accounts. Just think of that class ring, that savings account, that checking account. There are going to be a lot of different asset accounts. There's going to be a lot of different liability accounts as well. And so keeping track of those, we're just going to be setting these up. And on that MindTap site, it's nice because it kind of sets it up for you. You're not having to sort of draw this out from scratch. You're just following along with the charts that are already made. But just know account titles up here. So what happens when Delgado Web Services buys some supplies? So remember, they have that $2,000 balance. So the Delgado Web Services has a $2,000 cash balance in their checking account, and they need to go out and buy some supplies to operate business. So maybe they go out and they buy some software programs or some business cards or something like that. So they spend $165 on supplies, or Michael Delgado's business does. And so what happens is the cash is spent, $165. So this is an example of a transaction that's happening only on the left-hand side. $165, negative $165 from cash. So cash goes down by $165. Supplies goes up by $165. And if we just even look at that, those balances are now, so now Delgado Web Services has a cash balance of $1,835, but also supplies worth $165 as well. If you add those two together, it will equal $2,000. We are in balance still after this transaction, so we're still in balance. Next transaction that happens, down here, transaction number 3, pay cash for insurance. Insurance is always treated like an asset because in a business, you pay an insurance premium to protect your assets or something. So like, you have a building that you're operating out of and you have to pay some sort of renter's insurance in case something happens and your computers get destroyed or whatever. You always pay for insurance up front and then it follows along the next month. So you pay for it in advance, therefore it is an asset. So pays $900 for an insurance premium. Cash balance goes down by $900. Prepaid insurance, that asset account goes up by $900. So again, after we tally these two things, nothing is happening over here on the right-hand side, but it's being canceled out over here by a minus 900 and a plus 900. And so if we tally up the cash balance after $165 in supplies is recorded, $900 in insurance is paid for, Delgado Web Services has a cash balance of $935, supplies of $165, and a prepaid insurance asset account value worth $900. We add all those things together, you get $2,000. We are still in balance after these things. So the thing that you're going to be doing throughout lesson 1, 2 in the practice problems is determining not even what the amounts are, but just what the effect of different types of things. So you'll see a question that'll just say paid cash for supplies, and there won't be any number. But if you know that paid cash for supplies means that cash goes down, so that would have a negative impact on cash, and it would have a positive impact on supplies. You're just going to be doing pluses and minuses throughout this one lesson itself, and we'll get to amounts kind of in the next unit as well. Another transaction here that you'll see what happens when Delgado Web Services buys supplies on account from Canyon Office Supplies for $220. What that means is that Delgado Web Services is allowed to buy something on credit, meaning they're going to get office supplies without having to pay the $220 in full right away. They will owe it to Delgado Web Services, or they will owe it to Canyon's office supplies, but they do not have to pay for it all right away. So this transaction number 4 happens, supplies go up by $220 because they buy office supplies from Canyon Office Supplies. So Delgado's Web Services supplies go up by $220. Now we're going to be on the other side of the equation. So in equating recording needs to happen here, and this is an accounts payable liability account, which means that they have $220 more of supplies here, but they also owe Canyon Office Supplies $220. So we're going to tally that up there. Now we're looking at the balances. If we add all of these up plus all of these, they're going to be in balance. They're going to be equal. Next transaction, Canyon Office Supplies says you have to pay $100 of your $220 balance right now. You can pay us the rest later, but we want $100 right now. So Delgado Web Services pays cash on account to Canyon Office Supplies in the amount of $100, which means, so they paid cash. Paid cash always decreases the cash account, and it's going to decrease the liability because they're paying off $100 of this $220 debt. So negative $100 on cash, negative $100 on the accounts payable. Again, if we tally all of our asset accounts, our account titles, and we tally all of our liability accounts and owner's equity accounts, we are going to get 2,120 as a bottom line number here, and 2,120 as a bottom line number here. Here are the answers. So when you go on to MindTap, this is end of lesson review 1, 2. And if you click in there, just note that each of these kind of have 2 different parts. And so I'm giving you the answer to the work together. You can also kind of find that in the book as well. Again, page 17 is like the chapter summary. So that's the last page of section 1, 2. But go in there, complete both of these, and I'm giving you the answer there to the work together on page 117. So again, you're going to have a list of 1, 2, 3, 4 things. So what happens when you buy supplies on account? Well, buying supplies on account increases the assets because the supplies is an asset category. And so you're going to classify that under the assets. That's going to have a positive thing there. But they're buying it on account, which means they're going to owe somebody money later. So supplies goes up here, and also liabilities goes up because it's going to be an accounts payable thing there. So receive cash from owner as investment. That goes back to that first part when Michael Delgado invested some money. So if you receive cash from the owner as an investment, owner's equity goes up. The equating transaction is also assets go up because cash is going to go up. Paid cash for an insurance, well, cash and prepaid insurance are both asset categories, so you know you're going to be on this one side of this equation. And in this case, you're going to pay cash for an insurance, so cash goes down, negative, and prepaid insurance would go up. That's a canceling out sort of transaction, so that each side stays the same. And then lastly, paid cash on account. Paying cash means your cash asset is going to go down, so negative there. But if you're paying off an account, it means your liability account, that accounts payable, is also going to go down there. So go get started on that mind tap for lesson 1-2. Work together and then do the work on your own. Revisit this presentation or the textbook for answers.